let's get into this quick breakdown of FedEx. And I know most of you know FedEx is a logistics company. Some people call it a shipper. Some people call it a package delivery company. Their goal primarily is to, partner with businesses and take their particular products and, get them from that business to their end consumer. They have consumer accounts. They have B2B accounts. They primarily do their thing in the shipping and logistics space. So I'm not an expert in this space. I know that the three major players are going to be FedEx, UPS, and also Amazon. This is a really, really interesting space if you really want to get into it. There's a lot of opportunity here because one thing about this space is a lot of volume, right? Because you got FedEx, you have Amazon, you have, and they deal with a lot of contractors. You have UPS. You also got something where I'm from called DHL. And then you may have regional shippers that essentially are white labeling a shipping service, and when they may have a partnership with somebody else, but they're just kind of white labeling that service. However, the three big publicly owned companies are going to be FedEx, UPS, Amazon. And what we're looking at now is, do we believe FedEx is going to be able to support some of the higher prices as a result of coming up out of the pandemic? Or is it going to trade in a lower range because of some of the external issues around their business, like labor and gasoline? Now, one of the things that we saw before the pandemic really hit was FedEx was under a lot of severe stress because of the threat of Amazon. And Amazon was taking a lot of their business. They initially had a partnership with Amazon. Amazon broke off that partnership, and therefore they lost that revenue stream. And then Amazon kind of started to eat into their business. You can still on Amazon order something and it comes via FedEx, but it's not like what it used to be maybe 4 or 5 years ago. And that was one of their biggest threats. Then we had the pandemic, and everybody, was sitting at home. They started ordering a lot of stuff. So FedEx really kind of revitalized their business off of that. And you can kind of see that from the chart. We're looking at the chart. Let's go to the weekly candles. It was here in 2018 at 274. It started moving all the way down right before the pandemic. It was around 158. And so these are some of the bad earnings because of the competition from Amazon. So they was at 200, started moving down. We see once we got into the pandemic, they moved up really, really aggressively, right? Moved up really aggressively to 300. And we kind of had that 300 mark as some basic resistance for them. And we talked about this on the video last year. If you're really familiar with the channel, we've already gone through FedEx. Hit that 300 resistance, sold down, got around the 230 mark, got a bounce off of that, and then came back down and kind of traded around that 230 resistance point, and then now started trading even farther down. Now, I know some people that were looking to kind of play this short. One thing about FedEx, if you look at it, so we're looking at the weekly candles, is it has really strong support around the $200 mark. Okay? And when you're looking at this to try to play it from the short side, what I would look for is a rejection of the 200. One thing about FedEx, it's not really a fast mover, right? However, so it's not really a fast mover, so you don't necessarily have to worry about, I wouldn't be worried about getting lost on the play unless there's some catastrophic news about it. However, because I know that 200 is a really, really strong support, I would look for a confirmation, and you have to come up with your own confirmation number, right? So people a lot of times ask me, a lot of times the biggest question is, what's my entry and what's my exit? So let me ask you a question. I don't know how to put this in the right context. Like, when do you know to do something? Right? So when do you make a decision that this is the right time for me to do it? Right? So if I'm looking at FedEx for downward selling pressure, right? I can plot all my lines out. Okay, that's cool. At what point under 200 do I believe, based on a comprehensive understanding of the scenario, this is a good time for me to enter? Because it doesn't matter what scenario you pick, you could always be wrong. Or the market could change, which means you're wrong. Either way. Therefore, you could have the most confidence in the world about your entry. So you can say, hey, when I get 3 candles or 3 days in a row or 3 red days on FedEx under 200, I'm going to use it as a confirmation of my entry point. Okay, you get that. So that means you enter on Thursday. You got 3 red days in a row. FedEx has traded negative Monday, Tuesday, Wednesday. You enter on Thursday right at the money for put contracts. Okay. FedEx comes out Friday that them and Amazon have reestablished their deal for logistics. And it's a deal over the next 5 years, going to be worth an estimated $275 million a year over the next 5 years. That's just some ballpark numbers. Okay. Okay. So you're immediately going to get pushed out of that position. Therefore, the actual management of the trade, right, normally would be more important than the entry point, in my opinion, if I look to play at the money or as deep in the money as possible, unless I really feel like I'm savvy and I can play it out of the money. And many people that play out of the money are not experienced enough to really know how to do that. So they just lose a lot of money in the market because they just want to be in the play, but they don't understand from a comprehensive standpoint what are some of the risks of playing really, really far out of the money, especially if you're looking at a company once you start to understand their historical support and resistance. But that's a question people ask a lot, is like, well, what's my entry? I would always tell you at the money or in the money at an expiration date as far as possible in my scenario, right? So that's how I would look at it until I got really savvy to where I can look at a scenario and feel confident I can play this out of the money based on where I think this company's going and not feel like I'm just giving my money away to the market. Most people start there and they lose so much money before they actually learn how to trade properly because they just want to be in on the play. And they don't want to get plays or get tickers that are going to be more appropriate to them. And that's kind of why they have issues. So that's what I would look for entry. But it doesn't matter what entry you pick. You can always be wrong, or the market can change on you, which is going to make you wrong. And you just have to accept that because you're not in a market that is static. It's constantly changing. We're going to kind of talk about that. So this is the weekly, right? We see that on the weekly. Every time we get around the 200, we either get consolidation or we really get rejection. We don't fall under it. And one of the things that we see, let's go back to the daily chart, is, and we see it a little bit better on the daily. So look at that 200 from February all the way until now. We keep seeing bounces off that 200 strike price, right? We just keep seeing bounces, which means that the market sees FedEx cheap or in demand when we get around 200, right? The market keeps seeing that, and it kind of rejects 230. So between like 227, 230, it rejects, and it really believes that it's inexpensive at around 200. So you got a nice range in between the two. And what we see is that we were getting here at around 613, right? We was around the 200 again, and then we got news that they're going to put a dividend out. So that came out really last week. They're going to do a dividend, 50% increase to its quarterly payout. Now, FedEx is getting ready to release earnings in a relatively short amount of time. They may be doing the dividend payout because the earnings may not be what people would anticipate, right? And therefore, what they're doing to maybe offset maybe a softer earnings, because FedEx may be dealing with higher labor cost. They also may be dealing with higher gas costs, which it can impact their margins, is the fact that where they're going to pay people more money to own the stock, which is going to be very attractive, right? It's very attractive to me that somebody will pay me money to own the stock, especially if the stock is not in a growth. So I don't get the capital gains, I don't get depreciation, but I do get a cash payout for owning the actual stocks. That may offset a weaker than anticipated earnings. Another thing we want to look at is if we see that let's go back to the weekly. We see that we somewhat reject that 230 mark, even if the earnings is really, really good based on what, where we're trading at when we go into earnings. So let's say the earnings is really good and we got the dividend payout. It could put a ceiling on where the stock goes because there's really no more enthusiasm around the stock. We know we got the dividend payout. That created a lot of enthusiasm. Unless earnings is just out of this world, it may not be able to create any more enthusiasm around the stock. So if earnings is a surprise where it's way better than expected, it can. If earnings is in line with expectations, it may not create any more enthusiasm. Therefore, what we could get is the market could be very lukewarm to it, or we could get another sell-off. But then we still would want to look for the support level around 200 to be respected. When we're getting under that, to me, the next support level is around the 150 mark. Therefore, once we get under the 200, we do have a decent amount of room to fall, especially, within like a 2-year time span, because we see that we at one time traded in this range, and then we came up out of here extremely aggressively. There is some decent support on the way down to 150, but it's not a lot of really hard support till we get around the 150 mark. Therefore, if we do get under 200, for something that can change people's perspective on the stock, it may not get supported back up till we get to the 150, where people say, okay, this is a good price to start accumulating again, right? That's kind of what you want to look at, in my opinion, with FedEx. That's what I would be looking at. We talked about before. Let me go to the statistics. So beta is 1.32. It's not really a fast mover. And that's what I talked about before, is that, in my opinion, if I was looking at this, I wouldn't be in a rush with it, because it's not like a super volatile ticker, right? It has decent volume on the day, did a lot of volume the last day of the trading period, but it's not a super fast mover in relationship to the overall market. And I wouldn't chase it, right? I just wouldn't. The last time I really looked at it, let me go to the weeklies. It was here. I remember when this happened, and they reported, and it just sold all the way down. And that was because the market it kept rejecting that 300. This was a big sell-off for them. I remember when this happened. And it somewhat recovered from that. But it's not a really fast moving stock. It's not a really volatile stock. It's considered a relatively safe play. It's not considered a growth play like that. However, there could be some opportunity for people that really want to spend the time to really understand this space, understand what are some of the issues, do a SWOT analysis of, I would say, the big three, which would be Amazon, UPS, and FedEx, and then kind of understand how those companies are performing. So what's the overall macroeconomic situation? Maybe there's recession, maybe this inflation can impact consumer buying behavior, which means they're going to have less things to deliver. We got rising energy cost. We got labor issues. Even if they get demand, can they find labor to serve the demand? So we know with like FedEx, UPS, they always hire more people around the fourth quarter. Can they find those people? If they can find those people, how much money is that going to cost them to find those people to work? Because, they go on hiring blitzes right around, like a little right after Thanksgiving, they start doing a hiring blitz. Those are some of the things that I would be looking at. And these are the kind of things that, people that are successful in this space, they investigate those kind of things. What do we think is going to impact their operating margin? What do we think is going to impact their revenue? How are they going to manage these particular situations? So, the earnings calls can give you a good understanding of that. And then from there, you can kind of just start forecasting where you think it's going. So that's pretty much going to be a basic FedEx breakdown. It's not considered one of the hot stocks in the market. They don't have the controversial CEOs, but they're a really good business based on what they do because of the amount of volume that you have in these particular spaces. And they do have somewhat of a consolidation amongst the top three where they get the majority of business in the space. So that's going to be it for FedEx. David W. Williams, also known as Diamond Dave. I'll talk to you later.